Most people miss the biggest crypto opportunities for a simple reason. They chase coins after they already pumped 300%. Every crypto bull cycle works the same way. A few sectors quietly grow in the background while the market is still sleeping. Then suddenly, the narrative explodes. In 2017, it was ICOs. In 2021, it was DeFi, NFTs, and Layer 1 chains. The next cycle will be different. Today, we're going to break down 3 cryptocurrencies that could lead the next bull run, based on real trends that are already attracting capital today. Not hype or memes, but sectors where serious money is flowing. Most investors fail because they want instant results. They want to turn $1,000 into $100,000 in one trade, but it looks like gambling. So instead of asking, which random coin will pump? Ask a different question. Which sectors are attracting the next wave of capital? Right now, 3 major sectors stand out: artificial intelligence plus blockchain. Blockchain infrastructure, real-world asset tokenization. These sectors are attracting venture capital, developer activity, and institutional attention. And historically, those 3 factors are what drive the biggest winners. Let's start with the first sector. Sector 1. Artificial intelligence plus crypto. Artificial intelligence is currently the most powerful technology trend in the world. Companies like OpenAI, Nvidia, Microsoft, and Google are pouring billions into AI infrastructure. But here's the problem is that AI today is centralized. The biggest models are owned by a handful of companies. Data is controlled by large corporations. That creates 3 problems: data monopolies, lack of transparency, limited access for developers. The goal is simple: create decentralized networks where computing power, data, and AI models are shared across the blockchain instead of controlled by one company. This allows anyone to access AI resources without needing permission from a tech giant. And one project is currently leading this movement. Crypto number 1, Render. Render Network is quietly becoming one of the most important infrastructure projects in decentralized computing. Originally, Render was built to solve a problem in the graphics industry. Hollywood studios, gaming companies, and animation creators spend enormous amounts of money on rendering farms just to process complex graphics. Instead of building giant centralized rendering centers, why not connect thousands of unused GPUs around the world and create a decentralized network of computing power? Everything runs through blockchain verification. This model is incredibly powerful. Training AI models requires thousands of GPUs working simultaneously. This is exactly the type of infrastructure Render is building. In other words, Render isn't just a graphics network anymore. It's becoming decentralized AI infrastructure. Instead of relying on centralized data centers like Amazon or Google Cloud, developers can access distributed GPU networks. Another important factor is ecosystem growth. Strong projects attract developers, developers build applications, applications bring users, and users bring capital. Render's ecosystem has been expanding steadily with integrations in digital content creation, gaming, and AI development. Most retail investors are focused on meme coins and short-term speculation, but AI infrastructure is only one part of the next crypto cycle. But without blockchain infrastructure, the entire blockchain ecosystem cannot scale. Think about the internet. People remember Facebook, Instagram, and Netflix. But the real financial giants were companies that built the foundation: Amazon Web Services, Nvidia, cloud infrastructure providers. Crypto works the same way. If blockchain is going to support global finance, gaming, AI, identity systems, and digital ownership, it needs massive infrastructure improvements. Because the biggest weakness of crypto today is still the same problem it had years ago. Scalability. Networks get congested, transactions become expensive, speed slows down. Instead of building one giant blockchain that tries to do everything, modular architecture separates responsibilities into specialized layers. One layer handles security, another handles execution, another handles data availability. This approach dramatically increases scalability, and one project has positioned itself at the center of this new architecture. Crypto number 2, Celestia. Traditional blockchains like Bitcoin and early Ethereum are monolithic, where everything happens on the same chain: transaction processing, consensus, data storage. Celestia focuses on one specific job: data availability. Instead of processing every transaction itself, Celestia ensures that transaction data is available and verifiable for other blockchains. This allows developers to launch their own blockchains quickly without needing to build security and infrastructure from scratch. Why does that matter? Because the next generation of crypto applications will likely require thousands of specialized chains, not just a handful of massive ones. gaming networks, AI networks, financial settlement chains, tokenized asset platforms. Each use case may need its own optimized environment. Another major reason Celestia is attracting attention is its developer ecosystem. When evaluating crypto projects, there are three signals that matter most: developer activity, venture capital investment, real integrations. Celestia has been growing across all three and becoming one of the preferred data availability layers for those systems. This is the same pattern we saw with Ethereum in 2020 and Solana in 2021. So, the third sector might be the most powerful of all. It connects crypto directly with the real global economy. Real estate, stocks, government bonds, commodities. And the technology enabling that transformation is called real-world asset tokenization. Most people still think crypto is just about trading coins. The next phase of blockchain adoption is an integration with the real financial system. Banks are exploring it. Asset managers are testing it. Governments are studying it. Because the global financial system holds hundreds of trillions of dollars in assets, almost all of these assets exist in traditional financial systems that are slow, expensive, and restricted. Buying international assets can take days. Settlement times are slow. Access is limited to institutions. Blockchain can completely change that. Sector 3. Real-world asset tokenization. Instead of a traditional contract stored in a bank database, ownership becomes a digital token recorded on a blockchain. This unlocks several powerful advantages. First, liquidity. Real estate, for example, is normally very illiquid. Selling property can take months, but tokenized assets can be traded instantly on blockchain networks. Second, fractional ownership. Instead of needing $500,000 to buy a property, investors could buy small fractions represented by tokens. Third, global access. Anyone with an internet connection could potentially invest in assets that were previously restricted to institutions. This is why some analysts believe tokenized assets could eventually represent tens of trillions of dollars on blockchain networks. Crypto number 3, Chainlink. Blockchains cannot access external data by themselves. They are isolated systems. But financial applications require real-world data: interest rates, stock prices, commodity prices, exchange rates, economic indicators. Without this information, smart contracts cannot interact with real markets. Chainlink provides decentralized oracles, systems that deliver real-world data securely to blockchains. If trillions of dollars in assets move onto blockchain networks, those systems must reliably access real-world financial data. Financial firms, banks, and blockchain networks are testing Chainlink's infrastructure to connect traditional markets with decentralized systems. Chainlink provides verified data for those applications. Another major development is something called CCIP, Cross-Chain Interoperability Protocol. This technology allows different blockchains to communicate and transfer assets securely. In simple terms, it helps solve one of crypto's biggest problems: fragmentation. Right now, thousands of blockchains exist, but they cannot easily interact with each other as Chainlink does. Now it's important to stay realistic. No one can guarantee which specific coins will outperform. Crypto remains volatile and unpredictable. But look for projects that combine several key characteristics: strong developer ecosystems, real use cases, growing institutional interest, technological importance. Every bull market creates new winners. The next cycle will likely be driven by AI integration, blockchain infrastructure, and real-world asset tokenization. Because by the time everyone is talking about a project, the real move has already begun.